So there was this time in the in the mid 2000s, and it's been sort of memorialized in a couple documentaries whereby you saw a great amount of Chinese companies becoming publicly traded through what's called a reverse merger. And to the extent that you're not aware of what a reverse merger is when a private company merges with a publicly traded shell company or dormant publicly traded company. And the net effect of that merger is that that private company becomes publicly traded. And it's sort of been known as this backdoor IPO, and for years it's been ripe with abuse, right? It's been a penchant for abuse with stock promoters and pump and dump schemes and the like. But they persist, and throughout the mid 2000s on, you've seen kind of these lulls and high points and lulls, right? First with the Chinese wave and then a lot of those bottoming out, and then a lot of those companies coming back as shells again, and then you see new industries like cannabis and blockchain and stuff like that trying to sort of scoop up a lot of these publicly traded companies. But it begs a question, right, to continue on my discussion of alt ICOs, is that you had over 4,400 ICOs launched in 16 and 17, viable ICOs, right, where some money was raised and a token was in fact ultimately generated. And overwhelmingly they failed, right? Overwhelmingly they failed. But the reality is you have token in the hands of a number of people because people did buy into these ICOs, right? And the token may be worthless from a monetary standpoint, but the enterprise itself, right, the platform isn't necessarily worthless. And I'm not talking about like the IP or whatever project the failed ICO tried to do, whether it was a rocket ship to Mars or whatever nonsense so many of these were all about. But the reality is you have a built-in float, you have a built-in shareholder base, right? And so when you look at it, and a reverse merger, a sort of coined term for it was a alternative public offering. Well, maybe there's something, or there should be something called an alternative coin offering, right? Whereby a company seeking to acquire a shareholder base, seeking to acquire a listing for its project through tokens, acquires one of these dormant companies, right? And in the context, flips the utility of the original ICO to the utility in this ICO, right? And again, the whole concept of the ICO is avoiding the actual ICO, is avoiding the actual sale, because that's where the regulatory peril comes in. Because you see too often that the SEC is saying, okay, these are securities, your ICO is an unregistered sale. That's where all this enforcement action is coming from. So you've already had that occur, right? And the company is, for all intents and purposes, dormant. But yet you have, let's say, 1 million people with tokens, which are utterly worthless. Well, if you were to take that token, repurpose that token, right, by some type of merger or acquisition whereby you acquired the platform, let's say, of XYZ ICO, and you disregarded its assets, you put your own assets into it, immediately those tokens, right, may in fact have value. And that valuation can only increase because you have a flow, right? The biggest problem with like IPOs, especially small IPOs, is that it's hard to build a shareholder base. And if you don't build a shareholder base, the stock won't trade. And if the stock doesn't trade, then you have no liquidity. People can't exit, people can't buy. The stock doesn't go anywhere, right? You can see this, especially like on the OTC or even on NASDAQ to some extent. You see companies that don't trade because, one, they do a poor job of sort of standing out from the crowd, but two, they don't have any real ability to trade because there's no free trading stock. There's no shares in the market. Like, I can't go out and buy it, right? Nor is there anybody out there who wants to to buy what I'm trying to sell. And so as a result, the price can't go up. May not be able to go down, but it can't do anything. And so when it comes to fundraising and subsequent raises, being public actually becomes more of a hamstring than anything else, because you're paying to be publicly traded, right? You're paying for audits, you're paying for all these costs, but you're not reaping any of the benefits because there's no liquidity in the stock. Well, in an ICO, one of the great benefits was that there was this liquidity. You could trade these on exchanges, and it was great, and you could go down the road and do all these things. Well, but the problem is you had to at least sell enough in an ICO to acquire that base of token holders, much like a shareholder base in an IPO. So the question becomes, and this is sort of spitballing, but the concept is, if you repurposed a token, right? If you acquired a defunct ICO, call it, and repurposed the token in the sense that the crowd sale contract's already been executed, you have this float, you have this, and you immediately put assets into the company and list the token, is there an immediate accretion to value, right? Is there now a share price or a token price for these tokens? And based on that token price, can you subsequently do a secondary raise through like a safe or some other safe way of doing it, right? Non-ICO way of doing it, based on your valuation that you've now created because you bought that or acquired that built-in token holder base, that built-in shareholder base, right? And it's an interesting concept because there's tons. And I, just as a sort of a, I guess, academic exercise, I've gone through and looked at it and specifically reached out to various projects and said, would you be willing to sell? Would you be interested in doing it? And the response was overwhelming, absolutely overwhelming. You have a ton of options out there as it relates to what were viable ICOs, but the project itself, the actual business model, was flawed, or just didn't work, or they didn't raise enough money, or it was silly to begin with. Who knows what it was? Who cares what it was, right? As long as there's no debt attached to it, it's not a terrible idea, right? Because you can create this immediate ascension to wealth and to value that you wouldn't otherwise be able to do necessarily through like an STO, which, because there's no liquidity in an STO, right? So we go back to my concept of this small IPO without a float, or an ICO, which one, you have to be successful, obviously. You have to be able to sell. And in this regulatory environment, it's very difficult to sell. You're not going to do it. So the alternative coin offering, if you want to call that, I'm happy to field new names and somebody can run with this if they're really interested and come up with something more astute and more catchy. But I think there's an opportunity for that, because I think you create value through liquidity, you create a valuation that you can raise subsequent amounts on based on the valuation that this built-in token holder shareholder base would actually create. So that's my thoughts, part 3 of my alt ICO. I'm not sure if I've wandered too far off the reservation. Maybe I have, but the interest is definitely there. Like if you have an ICO and you know of an ICO from like 16, 17, 18 that just never really raised money but never went anywhere, I guarantee you there's interest. There's absolute interest for one of these reverse merger style token plays that has the ability to facilitate subsequent raises based on higher valuations. So that's my take. Definitely hit me up if you want me to refine and maybe explain this in greater detail. Adam at AdamTracy, TRACY.io, and I'll talk to you soon.